Alright, we did the Q4 base case, we did the bear case. Let's do the fun one, the bull case. After doing this model twice already, it's not too much work to make a bull case. On top of that, some of your feedback has also been helpful too, and as a result, we're able to further refine this model with greater accuracy. Now, this model is always the most exciting of thinking potentially how much money you could make on your shares. Not that it really makes much difference to us anyway, as we're all waiting to hit $10,000 or more. But there's still a satisfaction we get when Tesla is up to record highs. Yes, there is the increase in net worth, but also the fact we did so well with our conviction and are proud of our efforts we went to in buying these shares, like me, desperately grabbing at every dollar I could find when Tesla was in the 500s earlier this year, even maxing out my credit cards in order to do so. I know some of you thought that was irresponsible and it was bad financial advice, but they went into leaps that can now pay said credit card off 4 times over. But I had this energy within me that felt I just had to buy as much Tesla as possible and leverage it too. We went against the naysayers, the FUD, the media, Michael Burry, and all sorts, and believed we knew better. We hung in there and bought when we could. It's a great proud feeling to have believed in yourself and see that you were right. And sure, the monetary rewards are good too, but none of us are likely to realise them anytime soon. Now again, similar to my bear case, I want to keep this as a realistic possibility and not simply throw in big numbers for the sake of it. Otherwise, there'd be little point of such a model. I want to create scenarios that are possible. Of course, my bear face did not factor in potential macro events that are out of our control, so perhaps this scenario might imply that Tesla have worked around any potential supply chain issues as well. Okay, let's get on with deliveries. Model X was just over 9,000 the previous quarter, and this was during a ramping up stage, implying that in September, the end of the quarter, the run rate was likely considerably higher than July, the start of the quarter. So it might be possible that July was at a production rate of 2,000, August 3,000, and September 4,000. If we're at a run rate of 4,000 a month at the start of Q4, then that's already 12,000 rate for the entire quarter, except we aren't done ramping. From what I have inferred from Elon talking about the S and X lines in the past, with the new refreshed models, we're looking at a run rate of between 15 to 30,000 units per model for each quarter, but I feel that 20,000 is the most likely. Ramping up can take some time, but this is not volume production, and it's not an entirely new production line either, mainly just some interior updates. If the S was ramping up an extra 1,000 units per quarter, and we started at 4,000 a month, then that would mean we see 5,000 for October, 6,000 for November, and 7,000 for December, which would give a total of 18,000. But let's just cap it at 5,000 units a month for now, as that would then otherwise exceed the equivalent of 15,000 a quarter, which I'm not entirely sure they will exceed. So I'd like to round this down to 14,000, but supplement it further with 4,000 Model X's, as we do have around 3 months of Model X sales. In Q2, Tesla delivered over 2,000 Model S's to give you some idea, and they were only delivering for about a month. Anyway, this case is about the best possibilities. In my opinion, that does all sound possible, and I've justified as to why, giving a total of 18,000 Model S and X's for the quarter. For the Fremont Model 3, I think we could increase perhaps an additional 2,000 models due to LFP batteries being used, taking it to 52,000. I know the chips are the main concern with supply right now, but it's hard to judge chip supplies, and we're doing our best case scenario. Model Y, I think, would have ramped up slightly too, as it has gradually over the year at Fremont. In addition to that, the same applies for Model 3 using LFP batteries. Well, that frees up extra 2170 batteries that could be used in the Model Y, taking it to 60,000, the same number I used in my base case. There could be some holiday downtime here, but Tesla are generally very good at pushing out Q4. Alright, but Shanghai, that's the big one. Now, if you recall in my base case, I worked out how many units Tesla could produce going by October's run rate, and then I scaled it back for any downtime. Why are we too scared to just follow the numbers sometimes? If this is what the math is saying, then why do we have this emotion that it's too high and must be scaled down? I believe this is an issue for most analysts. On top of that, they also may have investors who go by their word, and the analysts may not feel comfortable if investors are buying because their estimates were too high. Perhaps, I don't know. I would have thought that just the most accurate would be the best. Okay, are you ready then? 54,000 units for October in Shanghai, with 7 days downtime, comes in at 2,250 units a day. If we assume 800 of these as Model 3, then 1,450 of these are Model Y. This incredible ramp up from Model Y was most likely attributed to the Phase 2 expansion in Shanghai, but a lot of it also had to do with standard range Model Y using LFP batteries, as they are less battery constrained as a result, which is a really good sign. What it will mean for production when Phase 3 is complete, one can only imagine. Anyway, that leaves 61 days for November and December, equating to 48,800 Model 3s and 88,450 Model Ys. But might I remind you, this is at October's run rate. There's also a chance that Shanghai has not yet finished ramping up yet either, but we do see some other months lower than the past months in production too. And like I said, although this is the bull case, I do want to keep it as realistic as possible. Add on October's numbers and we get 68,000 Model 3s and 123,000 Model Ys, or 191,000 in total from Shanghai. Wow, talk about volume production, 40,000 Model Ys a month on average. It's just over twice Elon's definition of volume production. And wow, we just exceeded 300,000 deliveries for the quarter by quite a bit, coming in at 321,000, over 80,000 more than the previous quarter, or 33%. I'm going to leave Texas and Berlin out. Even though we are supposedly seeing Model Ys coming out of Berlin now, I think it's still going to be too late for deliveries, and even if they achieve some, it won't be many. This is $4.2 more billion than Q3 in auto revenue alone. I'm keeping regulatory credits where they were, as they're starting to dwindle. Luckily for us, it turned out that Tesla were capable of making profits without them, giving us auto revenue of $16.5 billion. I'm going to increase gross margin by 1% more due to more X and S sales, more LFP batteries being used, and prices having increased from the previous quarter. That takes it to a gross margin of 31.5%. This becomes over $5 billion auto gross profit. Again, I'm just going to copy last quarter's energy and service. Tesla could have generated a slight profit here, but we are literally talking millions, which won't be noticed in our model. Total gross profit comes in at $5.1 billion. Operating income of $3.5 billion. I'm going to reduce interest payments slightly as Tesla have been amortizing more debt. This gives us a net income of just almost $3 billion. Now, I'd probably only put a 20% likelihood of this bull case occurring, but that is still a possibility. And if you're into asymmetric investing and you bought a call option, then depending on your strike price, you could get a 10 times return. A 1 in 5 chance of getting a 10 times return. Well, that's a good bet. If you make enough of them, then eventually you will average out on top. And that's how asymmetric investing works. If you annualize this figure, then we're at $12 billion annual net profit, or a PE ratio of 94, with a market cap of 1.13 trillion at the time of this video. Yes, it does feel better when Tesla is a $1 trillion company. So for those Twitter comments about me saying Rivian is overvalued when compared to Tesla, well, this is the difference. A PE ratio of 94 compared to a PE ratio of negative 100,000. Okay, that's not really a thing, but you get the idea. I don't even regard it as opinion that Rivian has totally bubbled. It's fact. At one stage, it was $180 billion, almost just 1/5 the value of Tesla, with a target of 1 million units at the end of the decade, compared to Tesla's 20 million units. Of course, Tesla's business is supplemented by an energy business of at least equal size too, along with FSD, potentially robots as well. Rivian have such a high burn rate as it is, but anyway, like Keynes said, the market can remain irrational longer than you can remain solvent. I think that was after he lost all his money in the market. Yes, even one of the most highly regarded economists of the 20th century, a highly educated Cambridge graduate, still couldn't predict the markets. That's why my strategy is to just buy and hold and hold and hodl. Of course, there isn't too much harm having a bit of fun on the side with some options, at times when the market does suffer from extreme irrationality. Either way, I'm still very excited about Q4 results, along with Q1 events, such as 4680 batteries in vehicles being delivered. But I suppose if any cars from Austin do come out of Q4, then they possibly would have 4680 batteries too. Proof of 4680 production is a really good sign. Thanks for listening. Please hit the thumbs up and subscribe. You can follow me on Twitter and talk to me on Patreon.